Dividend stocks have become increasingly popular among investors due to their potential for steady and reliable income. Dividend stocks are shares of a company that pay out regular dividends to shareholders, usually on a quarterly basis. These dividends are typically a portion of the company's profits and can be used to supplement other forms of income or reinvested for further growth. Investing in dividend stocks can provide investors with an attractive source of passive income and the potential for long-term capital appreciation. In this video, we will look at what exactly a dividend stock is, we will see how dividends work, and we're also going to see what to look for in a dividend stock before considering investing in it. But before we start, please take a moment to like this video and subscribe to the channel. It's totally free and it will help us a lot. What is a stock dividend? Dividend stocks are shares of companies that make periodic distributions to their shareholders, usually in the form of cash payments. Dividend stocks can be useful sources of income, but the best dividend stocks can also be excellent ways to increase your wealth over the long term. However, not all dividend stocks are great investments, and many investors don't know how to begin their search. A stock dividend is a payment to shareholders consisting of additional shares instead of cash. Distributions are paid in fractions per existing share. For example, if a company issues a 5% stock dividend, it will pay 0.05 shares for each share held by a shareholder. The owner of 100 shares would get 5 additional shares. How a stock dividend works. A stock dividend can be paid when a company wants to reward its investors but lacks cash or prefers to keep it for other uses. A stock dividend has the advantage of rewarding shareholders without reducing the company's cash flow. Stock dividends also have a tax advantage for the investor. Like any stock dividends are not taxed until the investor sells the shares. A stock dividend may require that the newly received shares not be sold for a certain period of time. This holding period for a stock dividend usually begins the day after the stock dividend is received. What to look for in a stock dividend? If this is your first time investing in dividends, you may want to familiarize yourself with dividend stocks and why they can be excellent investments. Once you understand how dividends work, a few key concepts can help you find great dividend stocks for your portfolio. Payout ratio. A stock's payout ratio is the amount of money the company pays out per share in dividends divided by its earnings per share. In other words, it indicates the percentage of earnings that a stock pays out to shareholders. A reasonably low payout ratio, for example, 70% or less, is a good sign that the dividend is sustainable. History of increases. It is a very good sign that a company increases its dividend year after year, especially when it can continue to do so during recessions and other difficult economic times, such as the COVID-19 pandemic. Consistent revenue and earnings growth. When looking for the best dividend stocks to hold over the long term, focus on the stability of the companies you are considering. Erratic revenues, up one year and down the next, and fluctuating earnings can be signs of trouble. Sustainable competitive advantages. This is perhaps the most important characteristic. A sustainable competitive advantage can take many forms, such as proprietary technology, high barriers to entry, high customer switching costs, or a strong brand. High performance. This is last on the list for a reason. High performance is obviously preferable to low performance, but only if the other 4 criteria are met first. A high dividend is only as strong as the company behind it, so compare the dividend yield after making sure the company is healthy and the payout is stable. I already made a video on this channel where I present a list of 15 dividend stocks to buy and to hold with low risk. I'll put the link in the description below for those interested. Thank you for watching the video. I hope you found it helpful. Don't forget to hit that like button and subscribe to the channel. See you in the next video.